Welcome back to the portfolio update videos. Currently, my 2 stock portfolios sit at a combined value of $92,640. This is made up of the $53,793 in my stake portfolio and the $38,851 in my Vanguard portfolio. Today I'm going to be giving a quick update of how my portfolio has been trading, my recent additions, and just a general update heading into the end of the year. So we'll start off with my stake portfolio. As you can see, it's up nearly 39%, so getting close to that 40% mark, especially as I haven't been investing as much in. So my dollar cost averaging hasn't been as much, so I still have my purchases at that cheaper price, especially as stock prices have been rising recently. But going through my holdings, you can see nothing in terms of my stake portfolio has changed. I haven't put any money in just due to conversion rates and fees, but yeah, many of the same things, especially if you've watched any of my recent videos, you'll know VOO, which tracks the S&P 500, is my biggest holding, and it's sitting at $17,589 in total equity. So that's up 4,442 or 33%, and I plan to keep this around 50% of my stake portfolio. I'll go through the Excel spreadsheet a little bit later and just kind of show you guys my justifications why and kind of how I'm weighting my portfolio. But if you have a look at the last year, amazing year, up 33%. So pretty much in line with what my total is, just because I've been dollar cost averaging. I have obviously been investing in this for longer, but I've also been buying more as the stock price has gone up. But yeah, my goal, like I said, is to keep this as 50% of my stock portfolio. I don't see myself as some amazing investor. I just want to get market returns, or maybe even just a bit more. That's why I have the other 50%. But I still want to make sure I have the diversification and all the benefits from investing in the overall broader market. And it's been quite good for me so far. I plan to hopefully get this position to $20,000. Keep in mind this is a USD figure, but yeah, it's been good, and I plan to keep going with this holding. Looking through the rest, you can see my biggest individual stock holding is actually Microsoft, and it's had a bits of ups and downs, but in the last week it's up 4.47%, and in the last month 5%, so it's had a little bit of a bounce back recently, but overall it's traded pretty flat for a lot. It's still up 20% this year, but underperforming the overall S&P. And my total equity is over $6,000 again now, and I'm up 41%. So not a bad holding for me, and it's something I plan to hold long term. Next biggest is Apple. So Apple on the other side of things is up 70%, and it's around $1,800. I'm up in the green, and my total equity is around $4,450. If you've had a look at Apple recently as well, it's also been trading upwards, up 7.3% in the last month. And up 24%, nearly 25% in the last 6 months. So really, really good times for Apple recently. This is a stock that I know a lot of people sold out of, or spoke about selling out of, especially around Warren Buffett exiting his position. But it's something I've kept. I'll reassess it in the future, obviously, but it's been quite good for me. My dollar cost averaging's been well as well. It's also the first stock I bought, and my average price is around $142. So yeah, basically $100 under what it's currently trading at now, which does make it a bit harder to buy in, especially at this higher PE ratio of 39. But I'm just kind of holding on to my shares at the moment. Going through the rest is, we can start with Amazon. Amazon stock has had an amazing year, up 57%. This is a stock I wish I was buying more of. Yeah, kicking myself because, I decided to invest in Google, which was also undervalued, I believed. Which is also hopefully going to play out good for me as well. But I do think I wish I put a bit more money into Amazon. It's a stock I do own a small portion of. I did grow it. It's up to $1,800, and I'm up 41%. But yeah, it's one pretty, I think, long term. Amazon seems to be doing all the right things. So it's a stock I wish I had a bit more skin in the game. I have 8.3 shares. But I do obviously have exposure to it in the S&P and VOO, and in my Vanguard portfolio as well in that ETF. So yeah, it's been a very good return of this last year. But if you have a look at the last 5 years, you can see there was this period here where it really had a rough turn around 2022, 2023. And if you were smart enough and you had the patience to invest then, you've really reaped the rewards with this amazing run up that's happened in the stock price. Next is Costco, which is now actually a smaller position in my portfolio, only 1,100 and 1.1 shares, but I'm up 100% on the stock. I did sell out of a little bit of it because I thought the price was quite crazy, especially when you see the PE ratio of nearly 60, which is insane. But I do love Costco and its business model. I am a customer. I have a membership, and it's just so good. The fact that they're not tied to any specific product, the fact that they can kind of get in and put in whatever's selling and kind of get in, get out. It seems to be growing. You see when they open stores around Asia, when everywhere it seems there's big lines for Costco. And yeah, the stock price has really reflected that. If you look at the last 5 years, it's up 253%. So basically above 50% returns year on year, which is amazing. And in the last year alone, it's up 67%. So yeah, I took a bit of gains off the table, and I still own some shares, and I'm up $550 in that, or like I said, $100, with an average share price of $500 a share. Next is Google, which I slightly mentioned before, but was a stock that I did recently purchase a bit more into as I sold out of JP Morgan. And it's basically sitting at $3,000 in equity, or nearly 17 shares, and I'm up around 15%. So if you follow Google, you see there's been a lot of speculation around stuff with the DOJ breaking Google up. So if you think this is a good time to buy, kind of buying a bit of and whilst it's volatile, then maybe this is a good time for you. But it's trading at a much lower PE ratio than its big tech competitors. Like it says here, 22.81. When you compare that to the likes of Microsoft and Apple, we're close to 40. And yeah, many of the other, even the S&P, I believe, as a total trades at a higher ratio when you get all the stocks combined. So if you believe in Alphabet, maybe it's the one for you, but do your own research. I personally thought I bought in at an okay price. My average price is 151, so not bad. And I'm up 15%, or nearly $400. So whilst it's had this little downturn across the past 6 months and traded pretty flat, it's still up 34% this year, so not bad, basically in line with the market. But yeah, I try to keep a long-term approach and see how this plays out over the upcoming years. Kind of see how Alphabet does. It's had growth in its cloud space. They seem to be kind of getting things under control with employees and those stock options and the kind of day in the life of Google workers where no one's actually working. But it's had a really good 5 years, up 160%. So you can't really complain. And having a look at my overall portfolio, I will do a full in-depth breakdown as the year comes to a close. Just kind of breaking down my portfolio. Then I can reassess where I want to put things, what I want to buy, where I want to be invested. Because I do think I'm quite heavily into tech. I did get to a point where I was I kind of helped diversify, get away from that. I had JP Morgan, which was quite big, Costco, which was bigger, McDonald's, stuff like that. But I've kind of moved back into big tech, and S&P VOO has also got a heavy weighting towards it. So I am quite volatile towards that. And stock prices are quite crazy at the moment. They seem to just be going up, up, up. The S&P's had one of its best years. So yeah, sometimes it can be hard to justify valuations when you're purchasing in. And like I said, this portfolio is now up $15,000, which is pretty good. And I've been doing these videos and tracking on here for years now. So you can go back and see any of my other videos with full transparency, even when the portfolio's value was less than $15,000, and now it's over $92,000. So it's been good just to kind of hold me accountable and just kind of show the journeys of when I was down 20% to now when I'm up, and just kind of trying to keep a long-term mindset. If stocks do dip, I'm kind of trying to build a cash position at the moment so I can be opportunistic and kind of buy in. But we'll just keep our eyes on for that. And at the moment, I'll just keep taking these gains, which the market's been returning to investors. Having a look at my Vanguard portfolio, I still hold the same two shares, or ETFs, I should say, VLC and VGS. And I did recently buy into both of them a little bit more. I think I allocated around $1,500, maybe a bit more than that, $2,000 into this portfolio. And I bought some shares of VLC, which is Australia's large companies index, and that's sitting at around $85.60, which is around $16,178. And VGS, which is the International Shares ETF, which is sitting at around $140, and I have $22,000 in there at the moment. So Overall, with this Vanguard portfolio, the goal is to hit 40,000 before the end of the year, which I think I comfortably will be able to, because the next pay cycle will be coming up next week and I'll be able to put in some money again. And yeah, hopefully hit that $40,000 mark, which means I'll be getting closer and closer to the $95,000 mark. And I'm really getting close to that $100,000 mark, which many investors speak about. So that's been a big goal of mine, to hit $100,000 in just stock portfolio value. So obviously with cash and stuff like that, I've passed that, but just in my stock portfolios, to hit 100,000 will be pretty good. And it will be probably a big milestone for me as an investor, as someone first generation, kind of learned this myself and kind of been doing this for some years now. So seen the ups and downs, and still at 22 years old, I have a long investment horizon ahead of me. So hopefully I can just keep doing these right things and see that the compound interest work for me over the years. So yeah, the reason why I decided to put a bit more money into these was I didn't really at the time feel like putting it anywhere else. With VLC as well, I can actually, the goal obviously long term is not to liquidate my stocks. I want to keep these long term, but if I do need money in the short term, I can sell out of like VLC as an example. That's kind of, if I do have to sell a holding, it will probably be this, and I can use that towards a house deposit, things like that. So yeah, this is kind of my goal. I do get a very good dividend as well from VLC. A lot of these Australian shares pay quite well dividends, but I do worry about being over levered into the banks and stuff like that, because they've had a very big year. So the stock price of VLC's had a very good return. And VGS just kind of gives me, it's the closest I could get to VOO, because that's not offered for Vanguard here. So that kind of gives me a S&P kind of thing with a bit more global as well. So yeah, hopefully I can hit 40,000. That'll be a big goal for me, and then I'll be well on that journey to hitting $95,000 before the end of the year. Having a look at the Excel spreadsheet, this kind of just shows things a bit more visually. You can see there's the American portfolio and here's the Australian one, kind of how they're weighted. So you can see VOO in the American portfolio is 52%. The goal is to keep it around 50%. If it goes over, I'm not too worried, but I do want to keep it around that 50% mark. And then with the remaining, I do short videos on those. It's just a bit of fun as well, picking some companies that I believe in. And yeah, just gives me a bit of content and keeps investing interesting, because sometimes it can get a bit boring. There's nothing wrong with it being boring, but when you're just investing in the same companies every single fortnight. Same ETFs, so that does give a bit of fun for me. Granted, I haven't really been investing in my stake portfolio as much because of fees and stuff and foreign exchange, but I do like keeping it there as it is. Looking at the Australian portfolio, you can see it's around 60-40 or 42-58. That's kind of the goal for that one as well. I do want to, still at one point I wanted to keep it 50-50. Maybe I do that again, but at the moment I'm happy with 60-40. And again, I get pretty decent dividends through my Australian portfolio. I'm not a dividend investor, but I'm not complaining when I get them either. And my American ones have been growing as well. And what these two bottom graphs show is just the growth of the portfolio as I've been tracking it on here on Excel. So obviously they've gone even higher again now, but this is just from the very first day of the month. So you can see when I first started, my stake portfolio was 17,000, and now it's up at 51,000. And you can just see this nice this nice trajectory of growth, just slowly trading up and up and up, which is exactly what you want to see. And same with my Vanguard portfolio, just trading up as I've continued to dollar cost average. And again, if shares do dip in price, I want to hopefully have enough cash on hand to be a buyer, not a seller, and make sure I can kind of make the most of these opportunities like I did in 2022 when there was a bit of a volatile market there. Having a look at dividends as well. Obviously I haven't updated it for this month because I only do it at the end of the month, but you can see last month in November I got $10.85 USD and nothing from my Vanguard because that's every quarter. So nothing again this quarter, but then in January I'll be getting another dividend payment. Again, I'm not a dividend investor, but all my dividends just get reinvested, and it's nice seeing the snowball effect of them kind of growing over time. So it's been quite good. I mentioned in one of my other videos my goal is to maybe hit $2,000 in total dividends next year. So that'll be nice to do, especially as I grow my Vanguard portfolio. I think that's definitely achievable. Overall, this was just a quick update kind of going into the end of the year. I'll do a kind of a recap at the end of the year of how my investing went for the year. Returns, decisions I made, good, bad, and my thoughts for going into 2025. But yeah, that was it for now, and then stay tuned for a more in-depth videos coming up in the following weeks. Cheers.